What's up, guys? I'm Mike from StockedUp. In this video, we're going over the exact play to get into for next week. So something crazy is going to happen in the market in the coming weeks, and it's very, very important. We have a couple very strong catalysts in the market right now. So make sure you stay and watch the entirety of the video. We have a lot to go over, and something very, very crazy is about to happen in the market. So for the fourth day in a row, the Dow hit record highs, or the fifth day in a row, the Dow is hitting record highs. Everything's going great. Everyone sees all these top stocks like Apple going up. Everything's going great. Amazon was up 4% yesterday. Everything's booming, right? No one sees an end in sight. Everyone just sees the market going up, 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 and no one's expecting a pullback. But here's the thing. The market it's up on artificial, it's all artificial. One, there's low volume, and then, well, that's because, it was Christmas this week and low volume, but also the Fed has pretty much been injecting hundreds of billions of dollars into the market for the past, couple weeks. So pretty much these moves up, it's all artificial. The Feds are just pumping more and more and more and more money into the markets. Like we're talking hundreds of billions of dollars are just being pumped into the markets, and this move is all artificial. You don't see, like, even Apple, like, you don't see the SPY, you don't see the overall market go up as much as it has this year. The economy is doing good, right? Don't get me wrong, but to go from, what is that? To go from 242 to 322, so 322 minus 242, 80. The market overall is up close to 33% this year. This is not normal. It's up too much, and it's just an artificial move. So in terms of what we have happening for next week, one, the Fed is injecting even more money on Monday and Tuesday, and so that's the main catalyst. And then two, the market is so overextended. And then right now, implied volatility is so low. Options are extremely cheap right now. What we're going to have right now is the same opportunity that we had on July 31st. I remember on July 31st, I cashed out more money than I ever have in the market before. And that was because, one, no one was expecting a move down, and just like right now. And two, there was a big move down. So we have partially the same setup as July 31st and early August. But just it's very important that you play this correctly. So we have an opportunity. The market can possibly go down between the next 3 to 14 days. That's our target range, right? So here's the thing: the market finished pretty much unchanged today. It was down 0.02%. In terms of candlesticks, the SPY from the open, it was down. But right now, implied volatility is extremely low. That means no one is expecting a move down. But the VIX too. This is where a big, this is very important. So the VIX has a nice bottom, right? It's starting to creep up. The VIX implied volatility is creeping up, meaning that people are expecting a big move. But more than anything else, that the institutions, Goldman Sachs, JP Morgan, all these big banks, they know more than us retail traders, right? We understand that. And what we could see is they are loading up on VIX calls. So the VXX $18.50 calls, they are, one, loading up on these, and they are also loading up on the 15 strikes for January 24th. So between the last 2 days, they bought 5,000. They bought about 5,7. They bought 12,000. They bought about 12,000 contracts for about $120 each. So they were dumping $1.4 million just into these contracts, which expire in less than a month. And they are also loading up on the $18.50 strikes too. They put about 1,900 times 54. They're loading up about 100 grand into those too. So they are loading up on VIX calls. Institutions know what's going to happen before we do. They know much more than we do in terms of the market overall and just which options are ready to play. Institutions are loading up on VIX calls. When the VIX goes up, the market goes down. There's a huge opportunity right now for the market. Specifically, here, I'll show you. Any one of the VIX 24 strike, January 24, expiration calls, any option between the strikes of $15 to $18.50. That's like the sweet spot. If you want to go a little bit further out of the money, you can. If you want to do some call debit spreads, you could do that too. But overall, the market is ready for a big move. I would not load up yet. The market did not start to actually fall yet, but if you want to get in early, now's the time. Monday, of course, stat modeling members, they had the opportunity to get in Friday before close, which is today. But there's something huge is going to happen within the market very soon. Now is the time to take an entry position. Okay, you don't have to go full in, but the market is really, it's come to a great setup right now. I had a small entry position. If the market starts to turn down, I'm gonna load up on VIX calls or even some Dow stock puts. We'll see, but we have a lot of opportunity in the market right now. Stay active in the Facebook group. Very, very important. Thank you so much to everyone who's commenting down below in the comments. I can't thank you guys enough. You guys are responsible for, I want to thank you guys for bringing the channel to 800 subscribers. If you're not subscribed, click the subscribe button, leave a like, comment down below. It helps the channel so much, and the views have been amazing recently. I just want to say thank you so much to everyone who supports the channel and the Stocked Up movement overall. A lot's going to be happening with Stocked Up in the market very soon, so stay tuned. I just want to say thank you guys again, and have a great weekend.